Good morning. Today I have an update with regards to fertilizer stock, which surged 3% after the Q4 results and the revenue guidance was for FY26 was announced. Shares of UPL, it's a fertilizer stock, so ignore the auto component part. Market cap of 57,661 crores. Net profit growth 43% over the last quarter. Then revenue growth 43% based on Q3 to Q4, then 11% revenue increase from Q4 FY24 to Q4 FY25. You can see the net profit as we already saw year on year from a loss of 80 crores, it has jumped to 1079 crores. UPL has reduced its debt by 8,320 crores. Now it currently owes a debt has a debt of 13,860 crores. It had generated some cash flows about 4,450 crores from two capital transactions, which is the reason why it was able to pay off that debt. UP has exceeded its guidance for operational free cash flow generation, revenue growth, and closely met EBITDA target. Company had set a revenue growth target of 4 to 8%, but it surpassed the 8% increase. EBITDA guidance was above 50%. Company achieved a 47% target. Operational cash flow generation of 3 to 400 million, but the company has exceeded that expectation with 530 million. 4 to 8% revenue growth. EBITDA expected to grow in range of 10 to 14%. All investment opinions and recommendations mentioned are solely those of the respective experts, ensuring broking houses, rating agencies. These views do not reflect personal opinions or advice. Stock market investment carry inherent risk of financial losses. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions made based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. So we'll go through the further details. There you go. Okay, here we go. You can see the price is almost 5% down today. Whatever gains that it had made yesterday, those have been corrected today. So people have booked in the profits that they made based on the results that were declared yesterday. Over the past 5 days, the company has a minus 5% return. So again, whatever little gain that it had made, and plus over almost 5% additional value lost. Overall, in the last 1 month, the company has a negative return of 2%. Over the last 6 months, the company has a good return of 30%, which is good. Then overall, in the last 1 year, the company has a 26% return. High of 641, sorry, high of 678, low of 641. 52-week high 700, 52-week low 458. Ownership strength is missing the benchmark. Company stock market price is justifying the real value or appropriate value. The company can improve its asset employment, possesses stable growth and manageable debt. Price to book of 4.5, face value 2 rupees, book value 143, debt of 1827 crores, cash of 192 crores, earnings per share for the last 12 months 31 rupees, sales growth minus 40%, which is a concern, return on equity 12%, which seems to be low, profit growth of 55%, which is good. The brands that the company offers: Ronutriva, Quick4, Magnaforce, Quick Fuel, So it's a fertilizer chemical company. These are the peer comparisons: Bayer Crop Science, Sumitomo Chemical, PI Industries, Dhanuka Agri-Tech, and BASF India. It's a part of the Raju Shroff group of companies. UPL and Unifrost Enterprises. FII is 34%, promoters 33.5%, DII is 18.35, public almost 11%. So the price can be volatile depending, as there is 11% public holding in the company and the market cap is high, market capitalization value is high, which is the reason why that 11% public holding can make the price volatile. Company has shown good profit growth of 60% in the last 3 years. The PEG ratio is 0.37. Company has an efficient cash conversion cycle of minus 14 days, which is amazing. Company has a poor revenue growth of minus 22%. Company has high debtor days of 269, negative cash flow of 411. So the company isn't getting isn't generating enough cash flows to justify the current price. UPL is principally engaged in the business of agrochemicals, industrial chemicals, intermediates, specialty chemicals, production and sale of field crops and vegetable seeds. 52,000 crore market cap, current price 643. Then return on equity as per this site is about 4%, which is very low indeed. Company has low interest coverage ratio. Company has delivered poor sales growth of 5.5% in the last 5 years. Company has a low return on equity again. Some comparisons to the others: you have Bharat Rasayan, Shraddha, Popchem, Rallis India, the additional companies that weren't in the other site. Then return on capital employed, you can see UPL is one of the lowest. Then Shraddha Cropchem 4.2, Bharat Rasayan 12.5, Dhanuka Agritech 27, PI Industries 24, Sumitomo Chemical 21. So these three companies, you could do a thorough analysis and compare the financials, the profit growth, the growth of the fertilizer and the chemical sector, and the industry growth rate. So, what are the chances of the company's overall growth in the growth of the sector? That would be dependent. Then you have sales. You can see sales has been growing very well. You can see the last one quarter, there's about 40% growth, 38 to 40% growth in revenue. Net profit has jumped up about 18%, 17, 18%, which is amazing. Then the earnings per share has increased from 9.81 to 10.6. Then you can see year on year sales comparison. Compared to the last 2 years, the revenue has gone down. However, over the last 1 year, there is a slight improvement of revenue of about uh, one. You can say about 8% revenue growth in the last 1 year. Then there was a negative EPS in the FY24 year, which has corrected and improved to 10.6, which is good. Net profit has gone up to 820 crores from a negative of 1,800 crores. However, over the last 2 years, the profit was 4,400 crores 2 years ago. So there has been a dip in the overall profitability of the company over the last 2 years. Uh, Sales growth 8%, profit growth 198%, stock price growth 32%, ROE 4%, continuously dropping year on year. Then you can see reserves have grown by about 20%, which is a good sign. Overall borrowings have reduced as well, which is good. Overall liabilities have increased, so that is a bit of a concern. Debtor days has reduced, which is a good sign. Then inventory days have also reduced, days payable have also reduced. So overall good performance. Cash conversion cycle has gone up, working capital requirements has reduced. So overall a good positive year in terms of all the ratios, with terms of revenue, with terms of profitability, overall a good performance. Please consult a stockbroker to see how the company would, have an expectation in the next quarter, next 2 quarters, and overall profitability and revenue over the next 1 year. So thank you for watching. Please share this video with your friends, family, and associates so that they could also benefit from this information. Please share your valuable feedback as regards to the content and the presentation of this video. Anything that would help, uh, analysis and decision making would be something that would be happy to add. So thank you once again.